Good morning, ladies and gentlemen. How's everybody doing? And welcome back to another pre-market watch list with your host, this guy. So, good morning and thanks again for tuning in. Today, we will not forget to change the camera from the face to the screen. We will make sure to progress, always progressing. Good morning, daily bonus. Good morning, good sir. Good morning to all. All right, so probably most important discussion we can have today is whether or not we believe the markets are going to bounce or drop more. Okay? No. We're not forgetting the screen today. We're not going to fit the screen. No. I am feeling a little bit better than yesterday, but still a little sick. But I think we'll ultimately get over that. Yeah, so really the main thing is whether or not markets are going to bounce or markets are going to continue to drop, leave you on a cliffhanger, but let's get into it. All right, so let me get into sharing the screen here. Cool. Bounce, then drop. Yeah, we'll talk about COCP as well. We're gonna run through. Again, we usually try to run through some of the most popular stocks that a lot of people are talking about, and a lot of times it's because the most popular stocks are actually some of the worst to trade. So we try to do that to keep you away from trading some of the bad ones. So COCP actually had somewhat of a good day, more so than I thought it would have, but no big deal. All right, so first things first here is the market, right? So market pretty much didn't drop yesterday. Once market opened, market didn't drop. For some reason, Thinkorswim is displaying, this is something that's kind of weird, is Thinkorswim's displaying that the gap has been filled when in actuality a gap has not been filled. So I don't know why that's the case, but right now the charting on TD Ameritrade is 100% inaccurate and not correct. So I don't know if you want to be a conspiracy theorist and say that's just a means to try and throw people off, but if you look at this chart, again, gap was never filled. So how that happened, I have no idea, but it's really not surprising. It's just another area where TD Ameritrade sucks. Just kidding, but seriously. So anyways, we held a good support yesterday, as we should have. Like we mentioned yesterday, with where the market was at, you ran right into price action support. You ran right into trend line support. The likelihood that we were supposed to break down yesterday just probably wasn't going to happen. And since we have about a 10-point gap to fill to the upside, it seems pretty likely that either today, maybe tomorrow, or in a couple days, we might move a little bit lower, sure. But ultimately, from 333 down to, call it like 325, 323 area, there's like a $10 gap that needs to be filled to the upside in the market. So I think today or tomorrow, maybe throughout the rest of the week, beginning of next week, we're going to try and see the markets bounce back up and actually close the gap all the way towards 332. And if they do that, then we're going to see resistance around 332, and then we're going to try and roll over, and then that next move down would be the one you should actually really be scared of. This one is a first attempt move down, which is, you should always take as a kind of like a warning signal, a potential warning signal. But usually you're not going to get a full-on drop first attempt. So we're already seeing it hold from yesterday. We're going into today. We want to see if this can bounce back up and fill that gap. As we said before, we've been in a market where it's buy the dip, buy the dip, buy the dip. I can assure you it is very likely we're turning into a market where you should not buy the dip. Okay, that's been a norm. And now we're starting to transfer into a market where it probably is not what you're going to want to do. I have a strong feeling about that. And there's many reasons why. For example, like here's one of them, right? For example, when you look at it like this, right? When you're going up and you go, okay, buy the dip here, yeah, it makes sense. Why? Because you were trending up and you're just buying the dip that's a dip, right? So then we go up and you're kind of going up, right? And then this one, buy the dip. You see this was still trending up from this point, but now you go buy the dip and this has come all the way back down to that support evenly. So now you're actually kind of trending into more of a head and shoulders formation. So buy the dip could essentially work for a short-term play. But again, as we fill gaps and if we try to roll over, that's where you should be very scared, because this is not an uptrending formation, or well, it still is, but with the recent move down, we've made it so a head and shoulders bearish pattern can actually become a very, very relevant situation to play out. Beforehand, there was no possible way of actually getting any sort of head and shoulders. Now we can, right? And it's ironic that that is all sort of lining up with some Elliott wave, which you have wave 1, wave 2, wave 3, wave 4, wave 5, pull back, pull back, bounce, lower high, corrective move. I could see that. So, and again, I don't think this is the most accurate Elliott wave, but it's sort of there. So anyways, I think this is a situation where buying the dip, you should proceed with extreme caution right now, more so than other occurrences. And again, there's multiple reasons why. So I say for next couple days, we look long bias on the market for more bouncing activity, and then you kind of flip bias maybe back to something short, right? Okay. Yeah, Connor Tatsi, I'm on your opinion too. I mean, I've been a bearish trader on the market for, call it 2 years now. Well, has it really been 2 years? Yeah, I guess it's, well, no, it's probably been about a year and a half, maybe 2 years. But yeah, I've been more bearish on the market. And so, I have a bias, and I don't want to impose my bias on too many other traders. But so far, everything is pretty much going as planned. So we'll see. Again, a lot of people are underplaying the severity of the coronavirus, and the problem is, and there's many reasons. Like, that's the thing, is like making one argument about the coronavirus is you're trying to, you can't change the mind of billions of people across the whole world until you give people a real reason to get worried. But again, here's the best way that I can explain this is, from me to maybe one of you guys that are watching this that lives in Africa, that lives in Japan, or lives in Germany, or anywhere around the world, whether it's your country or it's my country, the most common thing that me and you and all of us from this country, that one and that one, the one thing that we all have in common is that we live in a system that's built off of fakeness, which is that we don't have any money that's actually really worth anything. What we live in is a system of fiat currency that really isn't worth anything. So we live in these countries and these economic systems that are really just built on debt. We're built on these air bubbles of debt. And if you're an individual that lives paycheck to paycheck, the most important thing that you can do for your survival is to make sure that you get your ass up on time and make it to work every single day so that you can make money that will allow you to get a paycheck at the end of the week, so that you can get a paycheck at the end of the next week. And that's why you keep waking up to go to work. You simply cannot take any time off and maybe go live your life, do a couple things you want to do for a couple weeks without running out of cash. That's the same world we live in from a country standpoint. The United States, China, you can think about them all as individuals, and they're all your coworkers. And believe it or not, even though me here in the United States, I think I'm the best coworker, at the end of the day, if we open up our bank accounts, we all look pretty much the same. And that's pretty much dirt poor with fake money. And we're all living on debt. And right now, China has stopped going to work. China lives paycheck to paycheck in a big debt system, and they stopped going to work 2 months ago. And it's not helping. In order for their wheels to keep turning, they got to start making a paycheck again. And then if it comes to, Italy, and Italy stops working, they live on debt too, they got to make a paycheck. And you're starting to see everybody lives paycheck to paycheck. And you cannot take too much time off work without getting fired. Basically put it that way. Or going broke and not being able to afford anything. That is the real system we actually live in when you pull back the curtain. So, yeah, the severity of a coronavirus is extremely big, because if it gets to the point where, yeah, you are shutting down facilities in the United States and things like that, then the system will eventually just come crashing down. It's a fact. It's very simple to look at it like that. Okay? So just know that we live in a system that's built off of debt, and our systems live paycheck to paycheck, and the only way to ensure that things don't come toppling down is to make sure the wheels keep turning. And right now, one of the wheels has fallen off the car over in China, and it's not getting repaired, at least anytime soon that we can see. And that one wheel that has fallen off the car in China is going to wear down the tires on all the other sides of the car. And if that tire doesn't get a replacement soon, the back one's going to go, then the left one's going to go, then the front one's going to go, and then you're going to be riding on your axles and you're going to blow your shit up. That's what will happen. It's a domino effect, okay? Domino effect. All right. So now that we've covered that little craziness and doomsday stuff for the morning, let's get into the other good stuff. So let's look at AMD. I'm just going to go really quick, right? So if you're someone who's a large cap trader, you're looking at anything like AMD, you're looking at MU. So look at AMD, you can see, here's that gap in the chart, that big old gap. That's what traders are going to try and get filled. So pretty much anything that has a really big gap down from the other day when the markets went down, the trader mentality right now is to push those stocks back up like a magnet and fill those dead spaces in the chart. So you got one there with AMD. You got one here with Netflix if Thinkorswim ever loads. You have one with MU. You should pretty much have one with almost every single stock in the stock market. You have one with NVIDIA. You probably have... Nope, Roku did an intraday 1-minute gap. Roku is one that filled the gap yesterday and still going through today, so that shows extreme strength. This is a stock that broke below its lower yearly deviation, so I think this is actually set for a good long day. We'll see, but Roku is going to be one of my top picks for today. Yeah, let me just take a look at something else here. Yeah. So anyways, for what it's worth, that's what's going on. It's a misconception that the U.S. is in debt. No, monkey. Definitely the U.S. is in debt. Definitely. I'm missing money by not looking. No, I'm not missing any money. See, I don't actually... Yeah, no, I'm not missing. I'm missing $0, right? As long as I'm not losing money, I'm in theory making money. So yeah, no, I'm not losing any money. I'm not looking at GILD. Yeah, everybody wanted to look at that yesterday, which it had a good move pre-market. I didn't actually trade it myself, but yeah, I mean, I think basically GILD has made the move that it's most likely going to make, and this one again has a big gap to fill to the downside. So you might be able to argue that you might do a gap fill there on that stock, but no, I probably won't trade GILD myself. NIO. So NIO is a stock that did move today. A lot of people are watching that. I probably, I could say I might trade this, but probably not. I probably won't. And the reason because is the setup is just awkward. I guess it could squeeze out. It really could. This is just a really awkward formation for me. Maybe there's more to it than I'm seeing right now, but yeah, you could watch this. But ultimately, you have up to, unless something really outside of the normal happens today, which normally wouldn't happen, you have up to about 565. So right now you have about 50 cents potential profit on that before you run into resistance. So at this point, you're already running into a good sell on this leg move. So unless you're in here or in very early here, you're pretty much already late on the move, and now you're really just hoping that it keeps going so that you can keep making money. But ultimately, a good move has already happened there. For myself, that doesn't really appeal to me to want to trade that because I know the move has already started. So I would say when I first started trading, something like that would grab my attention. I'd be like, ooh, it could have a really good day. But as the more you trade and the more you trade, you start to realize that move as the individual, I'm already late to that. So if you want to participate in that, or anybody else who has already taken part in that, congratulations. But for me, there's better opportunities out there that provide a better risk to reward ratio. Right, for me to go up 50 cents to run into resistance, I mean, the risk just really isn't there for me. It doesn't really make, the reward's not there for me. It doesn't really make sense. when the market opens up and I can go and look at multiple different stocks in a day and find great risk trades that make more sense than that. So I think there's potential on it, but I wouldn't get myself all amped up because this is the top at 565 and this is your first attempt at the top, so you most likely in a traditional stock trading day are not going to break 565. So unless something really outrageous is happening with NIO, you're not going to go through 565. That's typically what would end up happening. But if you really want to watch it, be my guest. Sometimes I'm wrong. Many times, not some, many times. Many times. COCP, yeah, so COCP was a stock from yesterday that a lot of people were interested in. I wasn't really that crazy about it myself. It ended up having a better day than I anticipated, for sure. Come on, load. Yeah, so if you look, it's squeezed all the way up. It's filled that gap as well. This one's a little bit interesting. Hold on. Gotta take a different look at it. Yeah, so we had some resistance here at about downtrending at about 165, and then if you look kind of intraday when we mark that off, you can kind of see that we were holding below the 165. We crossed over, we had a big jump over resistance, we then came down, we retested resistance as a new support, and we've now bounced. So I would say for right now, you kind of have to stay on the long side as long as it's over 165 here. 165 right now is a downtrending support that you could follow. But right now, you're at the high in terms of price action, so I wouldn't say it's that great of a buy. Still say it's worth following long as you're taking it on a dip. Right now, you're high in the cycle. Kind of. Let's see. Yeah, you're kind of high in that cycle for sure. All right, so if you look at it, and maybe that's off a little bit. Let me redo that. So let's try that again. Kind of like that. There we go. That's a little bit better. It's more accurate. So when you look at it like that, you're low in the cycle, high in the cycle, low in the cycle, higher in the cycle, lower in the cycle, higher in the cycle, pull back, bounce, crash below trend in the cycle, back up, rejecting upwarding trend. So right now, you're actually kind of on the resistance side of the trend because you're under. So this is kind of like a focal point where you could get a big squeeze out of the gates or you're going to get a big drop out of the gates because you're kind of battling trend and resistance at the same time. But I would say right now, you're kind of high in the cycle. So unless some random squeeze happens, you should pull back from here. Do a video on OneCoin, and I don't even know what OneCoin is. Nice, Mr. O, closing out 2K in the day. That's good. Give it 2 weeks. GILD. Let's hold on. Let me show you what you're working with. So yeah, if we look at GILD, right? So when I'm looking at this, I actually looked at this the other day. Okay. So yeah, this is a good formation that's coming out of here, right? And that does have a lot of upside potential. You've kind of broken out of that wedge like that. So yeah, this could very well be the next, or kind of like a start of a newer sort of bull run, right? I don't disagree, but when you tell me to look at it today, it doesn't really make a lot of sense to be long on it, considering you have gone on a big move, right? So you're low in the cycle, high in the cycle, low in the cycle, double top, break trend. So now you're getting kind of low in the cycle. So now you'd be on a counter trend trade move, maybe. So yeah, if you want to be long on this, there's probably a better entry for you. And I would just give it a couple days. Good morning, good morning, good morning. Best put on the market right now, I have no idea. Because the best put in the market doesn't exist. I don't know. How much money do you have? How much of a move are you looking for? What makes sense to buy? There's so many aspects that go to trading. That's too vague of a question, pretty much impossible to answer. Not to sound mean there or like an ass, but that's just the fact that there's really no... Actually, right now, it's probably better you don't get a put on the option. You should probably be long on the market right now, to be completely honest. Long for like very short time frame. Thank you, sir. Thank you, sir. No, it doesn't make it easier. It doesn't really make it easier to purchase an option when the premium's lower. Maybe it makes it easier for you to stomach purchasing an option, but in terms of actually purchasing it, doesn't make it any easier or any harder. It's just more expensive. But yeah, if you want to purchase a put, purchasing it as the price is going up would allow you to pay a lower premium, which means you could actually create profit faster as it actually starts to go down, rather than trying to buy a put as something's going down, pay a higher premium, and then be negative slightest little bit it goes up. Yeah, a lot of things there. mRNA was another stock that popped up today too. All right, hold on. Let me get to it. So they got earnings coming out tomorrow. I probably won't do anything with mRNA. They had a gap to fill here, so the squeeze up this morning pre-market allowed it to fill its gap. It's got resistance up at about 25, so I wouldn't expect this stock to get over 25 today. Heck, I wouldn't even expect it to get up to 25 today. It's got earnings tomorrow, so normally we see kind of a stagnant day on stocks when they're going to report earnings coming up very, very soon. So I'd probably just be on standby with something like that. Again, I would say it could have a good day. I would say this has got pretty crazy on it. It did get pretty crazy. But normally when a company is going to report earnings in after hours the same day, they usually don't trade all that well. So not that it can't have a good day. I just know that if I focus energy and attention on a stock that normally wouldn't have that good of a day, then I'll just be exerting pointless energy that could be used elsewhere. That's my concept there. So you might hear me oftentimes go, I don't think it's going to have that good of a day, and just kind of blow it off. And that's because of past experience and knowing that it's most likely not going to have a good day. If it randomly does, then that's awesome. But I'll be better off using my attention elsewhere, knowing that there will most likely be a good move, right? So mRNA I'll probably pass on. But again, like I said, any big cap stock that has a big gap down, that's what I will follow today. And that's where you're going to probably see some pretty decent moves if the market has a good day. If the market doesn't have a good day, then these will all probably be pretty stagnant, right? I wish. Amir, so again, you have to understand. So right. Let me ask you this, Amir. Do you know what a gold mining company does? Right? That would be your first question. If you don't know what a gold mining company does, then there's just really no way that you'd know if they're going to do well as gold goes up. But if you understand the fundamental business behind it, it's really simple, right? And it doesn't. I'm not saying I got to do a whole lot of research, right? So if I'm a gold mining company and my main job is to mine gold, how do I make money off that? I make money off that by selling the gold. I don't mine the gold to just hold gold. I mean, I can't get these big old bulldozers go and mine a bunch of gold just to have the gold sit in my basement. I can't make money on that. So the main way gold miners make money is by selling the gold. So you can bet your ass when prices of gold are flying, skyrocketing, you can bet your ass those gold miners are out there mining as much gold as they can get their hands on at that moment in time, because that gold is selling for a shit ton of money. So when gold prices are low, gold mining companies aren't really incentivized to go out and mine a bunch of gold knowing that the prices of gold are lower. But when the prices of gold are much, much higher and they're going up and up and up and up, let's get those machines cranking, let's get our manufacturing going, and let's mine as much gold as possible because we can sell it for $2,000 an ounce right now. We're going to make 100 times more money than we would have selling it a couple years back. So profits should go up for gold mining companies over the next year. So that's what I was saying is if you look at spot price of gold, it will be, or if you look at spot price of gold or maybe ETFs that track the underlying spot price over a mining company, you'll probably see that those charts and those prices have gone a little bit faster or better than the mining ETF. But that's also because you have to understand that mining should lag spot price, because spot price will dictate the future of the mining companies, because the mining companies have to mine and they got to sell, and that those numbers will be reflected on their books after they start producing and then selling that at $1,800, $1,700 an ounce. All right, so yeah, they should perform well, but they should take a little bit, be a little slower than the gold. Okay. Yep. Yeah, exactly, right? So, so as bad as it sounds, I mean, that's just the way it is, right? Like, why would I go and mine gold as the gold mining company when the prices are low? It's just stupid. I wouldn't do that. But when those prices are just going skyrocketing, yeah, you'd be like, hey, you know what? Hey, nephew, by the way, if you're not doing anything this Saturday, I'm just going to exploit your young child labor because I need to mine all the gold I can because we're going to get rich. That's basically what they're thinking right now. They're just like, holy shit, gold's at $1,600 an ounce, $1,700. Oh my God, it's going to 2,000. Start mining, sell it. That's the concept there. Actually, here's a funny story for you. So my grandpa, he was a painter his whole life and worked on cars and things like that, and wasn't like super wealthy or anything like that. But my grandma, I think most people maybe at some point in their life might have some type of nice like dishes and silverware and things like that. So anyways, my grandma had silver spoons and knives and forks and things like that. And I wouldn't say she had a ton of it, but she had a decent amount of silverware. And back in the day, silver just went through this crazy bubble. I don't remember the price, but silver just went skyrocketing one year. And my grandpa came home like a madman and started just rummaging through the drawers and through the cabinets, and he was just taking all of my grandma's spoons and her knives and her forks and all of her silver. And she was freaking out. He's like, honey, we're going to sell it. We're selling it right now. And she's like, no, you can't do it. He's like, just listen to me. Just listen, woman. We're going to make a bunch of money and we're going to buy it all back at a cheaper price. Believe me, trust me. So what does he do? Steals all the silver out of the house. He goes and pawns it off at top dollar price. And then as the silver market, which was a bubble, crashes, he bought it all back at a far lower price. And that's basically the way the silver market and gold markets work. They go through these phases where they're more expensive, and then you can literally go buy it back later cheaper. So that's what he did with my grandma's silver. So there you go. There's for you. All right, guys. So we're going to end it there. We're going to end it today on that note with old Grandma Polifrone getting her silver stolen by my grandpa and then him selling it for a profit and then buying it all back when silver bubble crashed. That was a cool story. So anyways, we'll end it there. The footnote before you go is that I probably wouldn't. With an 11-point gap down in the market the other day, it's hard not to want to try and see the markets come back and fill that gap. So I think we're kind of seeing this hesitant market where we kind of want stocks to bounce, but we are really starting to get more bearish in terms of long-term. Let me show you something real fast before I go, and this will be the last thing that I show you. Hold on. Ooh, I don't have that time frame on here. God damn it. Hold on. We're just going to go all the way back to 19. We're going to go back to when I was born, 1993. Wait, what? Why you not work? Number lock must be on 1993. And we're going to do it on a week. Sure. All right, give it a second here. Is that it? That doesn't seem right. Something's not right here. No, I don't. Definitely not doing this right, but that's okay. Yeah, this isn't what I really wanted to show you. Maybe I could do this a little bit differently. Hold on. No. I mean, kind of. I mean, this will help you get the understanding it from a cyclical move, right? That's what I'm talking about. Because stocks trend in cycles. So from a cyclical move, we know that our market's way overbought and we're way over the top in terms of cyclical moves. Because if you just look at the way the markets move, right, up and over, look at we retested support in our corrective down move in 2018ish, and now we have bounced through 2019, and we've gotten very high in this cycle, very high in the cycle. So like I said, from a cyclical point, we are way overbought in the market, and it makes total sense for us to come down. Why? Because stocks move in cycles, and if you look at the cycle, we're way over the top in our cycle. So if we just want to look at logical standpoint, we're way overbought, and the thing that would make the most sense is, yeah, let's have the market come down. That's what makes the perfect sense right now. So there was more I wanted to show you, but that's pretty much it. So yeah, we'll end it there, ladies and gentlemen, and I will see you guys all tomorrow for another trading day, another pre-market watch list. Okay. All right, guys. Everybody take care. Have a great rest of the day. I'm going to end this stream, and the stream will be back up if you guys want to watch these scanners for the rest of the day. All right, guys. Everybody take care, and I'll see you later.